Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Monday, December 13th, 2010. Well, folks, we have a nice little update on Wall Street. The Dow is up 45 points, while the Nasdaq is up 2.5. The S&P 500 is up just about 5. Now, the real catalyst to today's up move is pure and simple. It's the dollar. The dollar is getting hammered to the downside today. Take a look at the UUP on an intraday basis. It's at the low of the day right down here. Look, we gapped down today. It makes sense why the markets would gap up a little bit. And then again, the fall on the dollar sent the markets higher. And now we've gone into a kind of a sideways move in the markets as the dollar has gone sideways to the downside. So again, a weak dollar, very, very weak dollar, is helping keep this market up. Now, the interesting thing about today that I can say right off the bat is the markets are not up that much for the size of the drop in the markets today. You know, we have the SPY here up about 55 cents, but the dollar's getting crushed. So right away that tells us there must be some level of resistance up here that's keeping this market in check. And that would be the 125 to 125 and a quarter level we gave to our premium members literally months ago. We gave 124, that worked last week. Then we said 125 would be the next stop, 125 and a quarter, which happens to be an inverse head and shoulder target. That's exactly what we're hammering into. So again, Research Center subscribers privy to this information literally months ago all the way up. We talked about it all the way up to the last few days, and as well as the intraday stock chat members. So again, beautiful little resistance right up here, 125 to 125 and a quarter. If you go to your daily chart, you can see your inverse head and shoulders right here. And again, we talked about that a long, long time ago, and you can see the markets have slow and surely just continued to grind higher until you got to this white line up here, and that is the ultimate target of that inverse. Beautiful little inverse head and shoulders right there. You can see it right here. Here's your head, here's your shoulder, and again, upwards you go. You broke out right here at the blue line. This was the breakout right here. When you got above it, notice you never really came back underneath it, and that's the key. You came under here, but you never confirmed that break back below. Sure enough, the inverse continues all the way up there. All right, so again, on an intraday basis, it's a nice little gaining on the day, but you are running into a little bit of resistance, which is keeping this market in check at this current time. Gold, silver, all higher. Oil is higher today as well. Let's take a look at that. The USO has come off the highs pretty dramatically, but still is up about 16 cents. This is where you closed on Friday. This is where you're currently trading right on the 50 moving average, which should give it a little bit of support. The GLD today, take a look at this, folks, up 85 cents. Not a huge gain there, but a solid gain. The real winner today is your SLV. SLV is coming off the highs of the day, but still up about 79.80 cents on the day, which for a $28 ETF is a sizable move up. You're still underneath the daily highs, though. Take a look at the daily highs. Here's your daily high from last Tuesday's gap up when everyone was hyping the JP Morgan short case, and the media was just hyping, and we talked about it last week in depth, how you have to avoid the hype. Sure enough, that was the shorting opportunity. If we get back there, I'd let it break a little bit, and then I'd probably reconsider another short at that level. All right, so we'll continue to analyze that. And of course, we give out these swing trades live via the Research Center and the intraday stock chat, and just really let everyone understand the methodology. It's all about the methodology, folks. If you can just learn the easy methodology we teach, you can go trade anything. I don't care if it's a small cap, mid cap, large cap, ETF, market, currency, commodity, you name it, it's tradable based off of our analysis and guidance. All right, and that's the beauty of it right there. So let's go back to the SPY on an intraday basis. Flip over to that. Again, notice how you just kind of continue to float up. The volume is dying out. As we get closer to these holidays, you have to expect it. Over the last 2 to 3 weeks, we have had a neutral to upside bias in this market. That's spanning all the way back when the market was getting hammered here. Let me zoom in on my 60-minute here to give you guys a good sense. If you recall, we had a nice little drop right here from the 123 and change level all the way down to about 118, 117.50 or so. Everyone was ready to jump out of windows right there. And we said, guys, as we're getting close to Thanksgiving, this was a couple days before Thanksgiving, Black Friday, we know the Federal Reserve is going to push this market up. POMO is going to be there, permanent open market operations. You're going to have this market get pushed up. It's no brainer here. All right, so again, look for neutral to upside bias until you really get to the holidays. That has been our bias now for 3 weeks, and it has been perfect, going all the way back to really this time frame in mid-November, about a week before Thanksgiving. going right into it, and you can see the float higher here that we've continued to have, and I can zoom in even more, and just look at that neutral to upside. It's perfect. It's not too dramatic to the upside, really, aside from this one little gap up. You've just gone neutral to upside very slowly here, and again, today, have a little bit of an up day, sideways day now, kind of floating in a sideways fashion. So again, we continue to have that general bias over the longer term next 2 to 3 weeks into the new year. Although I will say this is that based on the 125 level, you could see a minor pullback off of 125.50 or so, 125.25, that upper resistance based on the inverse head and shoulders. There may be a small pullback. Is it worthy of a short? Well, I mean, if you're really looking for the short-term stuff, then obviously those in the research center know the calls we've made, know the biases we have on certain stocks based off the Pro Trader watch list and the hot charts and alerts and via the video and daily market report and stuff like that. That's fine. Keep an eye on that stuff. And again, a small pullback is possibly likely, but if you want more information, you need to join the research center. And again, as I always say, $49.99. If you're someone who can't afford $49.99 to learn and possibly make tens of thousands of dollars off of it, you probably shouldn't be trading at all, to be honest. It's just not something, and I'm talking swing trading or investing even. If that's too much money, probably need to stay away. Because again, it's all about, understanding the market, understanding the value, and also understanding the risk rewards. You have to understand these factors to really make educated guesses and decisions, and then base yourself and start to make money. And in a weird way, scared money won't make money. It's just the nature of the beast, because you'll make decisions based off of emotion when you shouldn't. You have to follow the technicals, and that's really why we talk about scared money not making money, and that's why big money usually wins, because they're more just matter of fact, while little money is going to be scared money. So again, it's kind of an interesting little facet there. But in any case, that's your 60-minute chart. We continue to see that, and again, while there could be a small pullback off of this 125.25 to 125.50 level over the next couple days, you still want to overall maintain that neutral upside into the end. And again, the only real catalyst that could cause a major drop would be a major default, new default in Europe, something with Spain or Portugal, or obviously North Korea, South Korea, Asia, something like that could cause an issue that would cause a drop that the Fed could not control. Otherwise, you're going to control this. I mean, the volume is really 56 million right now as we're after 1 p.m. Eastern time. 56 million, that's it, folks. Usually in a good average day over the last year, you probably were doing about 200 million. To do 56 million as of 1 o'clock with 3 hours left, and the volume won't get much heavier than this at this point, you're probably on pace to do about 100 million, about 50% of the normal volume in this market, and that's really been the case over the last few weeks. So again, we'll monitor that. Let's take care and I analyzed a couple different plays here. A couple of the plays I gave in the Research Center chat room over the last few weeks have been working out beautifully. Last week in the intraday stock chat, I gave out 2 key stocks. I gave out RPC, which was a former hidden gem that ran something like 500% for our members. But RPC, I said to them, wait for it to get underneath 30 cents, and that's your buy. If you get underneath 30 cents, that's your buy. Over the last couple days last week, it got to 28, 29 cents. That was the buy. Today, it hit 36 cents. Had some news this morning. We figured it was coming. It was cheap enough. The risk reward was right. Thus, it was a good play, making literally 20% for those who picked it up in one day today. In addition, ULU, another big play here. I talked about this on last Thursday and Friday, the intraday stock chat, and again, gave it to them as a swing. And look at this nice pop today. Up another 20% right here. Another play, 20% winner, and that's what you got to do, folks. You got to play the levels that look good on the charts but are also good risk reward. It has to match up on multiple levels. All right? And again, if you can do that, you will be a successful trader. You're never going to bat 100%. You're never going to always have winners, but the key is to be disciplined on your 1 or 2 losers out of every 10 and play the odds. It's again like being the house at a casino. You got to be the house. You don't want to be that simple kind of amateurish player who really doesn't understand the rules of the game and kind of gets shafted each time. Okay, now the dollar, as I'm looking here, dollar is down, ticking a little bit. New lows on the dollar. Let's see if this is resulting in a little bit of an upswing in the SPY. Let's go to the SPY. Not much of an upswing here, which is interesting again. So the dollar making new little lows, and the market is just floating sideways. Now, as the volume gets lighter in this afternoon session, it is very possible the Fed will come up with one more final push. And again, we could see a little bit of an upswing there, but nonetheless amazing to see the dollar getting hammered like this today. It continues to be the real catalyst. Remember the rules here, folks. The Federal Reserve is out to create an equity bubble. All right, it's all about an asset bubble. That includes stocks, it includes commodities, and really they're hoping houses too, but I don't think houses will respond in the same effect. But remember, their goal is to make the average American feel richer. How do you make the average American feel richer? Well, make the dollar go down. If the dollar goes down 10%, stocks must rise 10% to keep their real value. In addition, if the dollar's down 10%, commodity prices will go up, and all those stocks like Chevron and Exxon that are key components of the Dow and the S&P will increase earnings, therefore their stocks will go up even more. All right, and Freeport McMoran, you name all these plays, and then that's the thought process. Now Freeport McMoran's overextended, so is Chevron. I mean, a lot of these are done, and they should come back a little bit in, but nonetheless, that's the thought process. So I mean, you have a real push by the Federal Reserve to create this bubble, and it's amazing because the bubbles have been created naturally, well, by stupid actions by the Fed in history. But here they're actually saying, or they're showing us that they want to create a bubble, and they somehow think they can control the collapse down the line. Now, the collapse may be a couple years down the line, but it will still happen. And my one question to everyone that I want to let you ponder: has the Fed ever been on the cutting edge of helping deflate a bubble in the right manner? Absolutely not. And that's a scary thing to me. If there's one little thought I leave you with here is that, here they are actually intending to create a bubble. I don't think they intended to ever create a bubble in the past. Here they're intending to create it, and the thought process is, can they actually control it when it bursts, or kind of curb it before it bursts? I don't think they can. They've never shown it in the past. Therefore, we have to be aware of this down the line, and it's something just to ponder. And it does worry me. In all fairness, it definitely does worry me in the future. All right, enough said, folks. Market again just holding flat here. Very light volume. Join the research center, folks. $49.99 a month. My God, guys, you got to join it. It's just a no-brainer. Literally, the trades on the Pro Trader, I gave out, I think, 2 on Friday into the close. Cree and Riverbed were added on Friday as a gap up. They were added at the close, so people could have shorted them today. Take a look at Cree. Gapping up to 72.85 today on the open, and look at it now, 71.45. You're $1.40 in the money on that short. It was a bearish Pro Trader. Watch this. Riverbed RVBD was the other one that I added. Gapped up and pushed up to a high of 37.94. It's now trading at 37 bucks. Both in the money there already. And it's just, those are just 2 examples of things on the Pro Trader. You still have the hot charts. You still have the nightly videos. You still have the daily market reports. You still have all that other asset to your trading portfolio in the research center. And again, it's 50 bucks. As I said, can't afford it, shouldn't be trading. Take care, folks. Have a great afternoon and evening. Hope to see you all in the research center.